Traders from around the world, welcome to your motivational, sensational, inspirational, educational, aspirational, international, keenly awaited, highly anticipated edition of Profiting with Macro to Micro Analysis with your humble hosts, both Jeremy Alexander Newsome and the beautiful, vivacious, and incredibly smart Miss Samantha LaDuc. Samantha, how are you today?
Oh my God, I'm very much enjoying your energy.
Fantastic. That's what I like to hear. I am fired up. Me and you've been playing this for like months, and
When are you not fired up, Jeremy? You are just one of the happiest people I know. I am more monotone. I am just more monotone, and you absolutely bring the game to a different level.
Yes, ma'am. I'll always be there. I'll always be bringing it. So I want to kind of give an idea of everyone who is here, kind of a little bit of what to expect. Our goal and mission of this webinar is to give you both some highlights of how Samantha does her analysis and how I do my analysis, but specifically also look at some charts, talk about some trade setups, and give you some actual real life value in this webinar. This is going to be hopefully something we will do many times in the future, but again, realistically, our intention is to ensure that everyone here learns something new and can take away a piece of important details about the markets and have a place where you can ask questions without any overbearing or kind of weird format or structure. So I guess let's just dive in.
Let's do it.
Let's do it. So just make sure everyone can hear both Samantha and I. Can you type in a 1 into the chat pane just to make sure, because we got about 34 people here. All right, Robin's throwing in a 1. That's great. Mark is throwing in a 1. Everyone's throwing in 1s. Great, got the recording on. Fantastic. All right, well, thanks everyone for being here. Yeah, let's do it. You should be able to see Samantha's screen at this particular point in time.
Already. All right, groovy.
Yeah.
Hold on. I wanted to. Can you hear me?
Yep, I can hear you. I heard like a cool.
Well, what happened is, hold on.
Okay.
I love this little thing. We're doing a formal disclosure, right? Disclaimer?
Yeah.
You ready?
Let's do it.
Formal. This is very, very official. My lawyers worked so hard on this.
Bang.
There. How is that for totally official disclaimer now that it's out of the way?
Yeah, the ukulele was on point. That was awesome.
All right. So Jeremy, you were wonderful to invite me to do this little soiree here where we talk markets, but also how we look at the markets. And it's different. Yep. There's no question. I am very much, as I was joking around with you earlier, collecting enormous amounts of data points and then trying to connect them, assimilate them into patterns and analyze, and what's going to happen next. I actually like to predict stuff. So with that, I have also predicted that you would want to be absolutely winging it, and I'm Girl Scout. I have to have a little bit of preparation here. People know you since this was sent out to your YouTube channel primarily and on my Twitter account. Yeah. I am under the radar macro to micro analyst, educator, and trader, and I am founder of LaDucTrading.com and CIO of LaDuc Capital LLC. So I wanted to basically just, he's annotating already.
Yeah.
Okay. So now you're getting into it. So Jeremy, you said do a little intro of who I am.
Yes. So for anyone who needs to know who Samantha is, this is, again, you might have heard my interview with Samantha potentially about 2.5, 3 months ago. We met in New York City back in June for the first time, but her and I have communicated via the interwebs for a while. I want to give everyone an introduction to Samantha because her and I kick it off well. We chat pretty often. Recently, over the last few weeks and months, just about the markets. We text, we chat on the phone. So I wanted everyone to have an idea of who Samantha was. So yes, you kick it off and just give everyone a little bit of insight on who you are.
All right. Well, I am like you. I trade for a living, and I support clients who do the same. So I run a trader education service. It's mostly for professional retail clients, and I know that you do a superb job of attracting, kind of elevating, if you will, the new and experienced traders, and try to encourage them to be more full-time traders. I am pretty much attracting those who are already full-time. They're very active traders and investors. And that also includes some institutional folks that like my research, my market timing calls, if you will. I also offer allocated trading for those folks. I do trade on multiple time frames, so I can get right down and do a few hours, no issues. Love to chase market moving stuff. Love to swing trade. That's my bread and butter. And trend trade. And that is basically my time frames. My focus, anticipating volatility. So if anyone follows me on Twitter, they know that I'm really looking for inflection points. I'm looking for volatility to enter the market, and that's my thing. And it's across equities, currencies, commodities, rates. So, and then, basically that backdrop of the macro that you circled before is really inclusive. It's economics, it's fundamentals, it's technical, it's intermarket, and it's sentiment. Kind of like, more than just the lines on a chart, but that is absolutely how I enter and exit a trade, is based on lines of the chart. So that's why I come up with the micro, the trade ideas. So that's, first of all, who I am. Jerremy, your turn.
Okay. Yes.
So
I don't have a PowerPoint presentation, as Samantha mentioned. I'm just here. But my mission in life right now is to enrich lives with mentally liberating education, and I do that with numerous approaches. But specifically, I do focus on the stock market and help people understand how to invest properly, safely, and understand that you can protect yourself in down markets. You can make money in down markets. You can generate cash flow by day trading the U.S. markets, and you have the opportunity to use that cash flow to live a better life, to do the things that you might want to do, maybe travel, maybe buy stuff, maybe spend time with your family, maybe quit your job, whatever that is. At some point, do the things that really make you happiest.
And I have to say, honestly, I've been in this business, as you have, for a while, and you're not just talking smack. You actually care about your students, your clients, and you make it fun, but you're also an excellent trader. Like, I've stalked you. You are very, very good, Jerremy.
Thank you.
That is why I like to associate with you, because this is, I can learn from you. Sorry, that's selfish, but I can learn from you.
Yeah, well, the same thing is, and that's why I reached out to you. And for everyone who kind of wants to know a little bit about our relationship, Samantha is very good at macros. I was texting her 2 weeks ago. I was like, hey, send me some of your articles on some of this bigger picture stuff, because I'm not a macro specialist. I don't know a big pictures of things, and I'm working on getting better with that. My specialist, I am more of the micro side. So when it comes to hours and minutes, I'm amazing at that. When it comes to big picture stuff like Fed rates and interest rates and repos and tax cuts and all that stuff, I'm not the greatest, and I'm working on getting better.
Hey, this is a learning planet.
That's right.
So that's kind of where I really want to excel, is in the turning points from a macro standpoint in the market. And I'm really proud of these because they worked out. It doesn't always, as you know, trading is not a game of perfect, but I want to mention how these came about, the market timing calls using macro. And then of course you drill down and you can chase and swing and trend trade on different time frames, stock, futures, options. But the point is, I saw back in January 2018, the top. And I called it the top, not a top. And I will show you a chart, which was my intermarket read, much more so than macro, but I consider that kind of all in the same toolkit. The October, and that was so far, we have not taken that out. In other words, we've been going sideways since January 2018. October 3rd, of 2018, I was also really committed, and this was my macro for sure. It was the rate of change on the 10-year. We had hit 3.2%. Market was about to freak out, that we were going to 4 and all that, but it wasn't that. It was that we had gone from 1.6 on the 10-year to 3.2 in very fast order, and that was dramatic. My comment on that day was, nope, we're done. Volatility is going to hit now. Emerging markets going to panic, and equities will be repriced. Now, this V-shaped rally that came next was actually a prediction that I had written up based on the same intermarket that got me into the January 2018 top, believe it or not. And I'll show you that chart in a minute. But I like these pullbacks also. Then at support, then they bounce, right? So you can still, in the past year and a half, we've done nothing but go sideways, but big volatility in between. But this was a Market Huddle podcast right around Easter, and this was a pure technical analysis, very much like the recent pullback we just had the past few days. Gold rally. My indicators, were just absolutely screaming. We were going to go, rate cut, which was macro, bullish percent index was extremely oversold, which was intermarket. So there were reasons that all aligned for the gold rally. And then I got actually pretty lucky. I put a post out the day before we had a 3.5 standard deviation move in the bonds that actually came down from that parabola. And then the next day after, I sold gold and said I'm going short, and the parabola broke as well. Now that was, I got to tell you, that was lucky. that was just plain old luck. But this, hello, that's not what I wanted to do. I wanted to show you this. Okay, so this is the chart, and I'll show it to you in a bigger time frame that I had published for that January 2018 and the Christmas Eve massacre V-shaped rally. So it is totally, I'm not making this up. I documented it in advance, and it happened, and that was really cool. So this is what I really do. I like to take the macro and translate it into the micro so retail can understand it. And I think that is the nicest quote, testimonial, whatever you want to call it, that I ever got was Mark saying, who is a guru in currencies, right? My mentor, I have many mentors, by the way, who basically said, you take this institutional knowledge and you make it relatable to retail. And that's what I endeavor to do. And I work hard every day to do it.
Makes sense. So how do you go about trading those? What do you do specifically?
And what's the comment here that the small camera shows the PowerPoint? Oh, you're talking to somebody?
Yeah, so they're mentioning that they can't see it, but I'm letting the people know who are here. You can click the box on Zoom and you can move it around yourself.
Okay.
So if the chart's too small or wherever you're trying to look at, you should be able to drag and drop and actually double click it and adjust it yourself.
So I don't know how this shows up, but is it okay?
Yeah, I can see it fine.
All right. So how do I drill that down? Macro. So let's talk policies, right? And I have a saying, if you will, that my mantra, if you will, that policies, lead the economy. So we have a trade war, right? We've got tariffs.
Mm-hmm.
How is that going to impact business investment, business confidence, supply chains, oh my goodness, inventories? How is it going to obviously deal with markets that will become smaller and export sales and profit margin contraction. And then all of this eventually, which it has led to not only global manufacturing slowdown, but U.S. Manufacturing recession. And yesterday we had the PMI manufacturing report came out, and it was very, very weak. Under 50, immediately that is a de-risking event for wealth managers. This is not something.
So when you say de-risking event, what does that mean?
Means they lighten up. So you got folks that are holding and then they start selling. And I'm not talking about you and me. I'm talking about people with money. So the policies lead the economy. When we have the economy then contracting, lots and lots of indicators of contraction, then we have earnings also contracting. That's a fundamental assessment on the company. You saw Micron, right? They quote unquote beat. That's bull. The bar was lowered so far down, so they would, be able to jump over it, and they still couldn't. They tripped, and that was a 10% down day for a major semi, right? So the macro and the fundamental, but you could predict, if you will, that they would have a hard time this quarter based on, last year's comps. So policies lead price, earnings definitely matter. Then going into a technical assessment, which you do supremely well, and I, try my hand at it from time to time. The intermarket for me also is a really important thing. I'm going to show you some of what that means. I've got some real charts to show on intermarket where fractals, if you will, it's two things compared. And when they are together and when they're apart, the divergencies really, really matter. And I'm going to show you some of those. And then the other thing that I look at, of course, is I'm a mom. I'm looking at sentiment. I'm looking at psychology, just like my toddlers and teenagers. There's some volatility at times, and I want to understand when they're going to, act up so I can, try and ward that off or be positioned. This is the same thing, I think, with trading. You can see when there's compression in an underlying, right, where you're just, you're waiting for that thing to pop. And that is sentiment and psychology that also drives volatility.
Got it. So what would we go look at to kind of view some of that? What charts? You mentioned some charts. So I guess let's go pull some up.
Okay. You want to get to the charts. Yes,
Yeah.
yes. Okay. Yeah, let's do that. So, here's a good one. Is this a good one? Yes, it can. Okay, so I did, and let me know if you can see this here.
So right now I'm still seeing, okay, there it is.
Okay, so for example, this is Intermarket, and this is under my fishing lessons page, which is free. So the client stuff that I do isn't free, but I also make some stuff available. September 5th, I wrote, small caps may surprise to the upside. It didn't seem very likely because of this incredible consolidation. Can you see this?
I can.
You can.
Yeah, so what ETF is this?
Oh, so this, okay, SML is actually 600 of the small caps, but we trade the Russell or the IWM, most people, right? But the point is that I use this, institutions use this, and it's just cleaner. Now, the point I was trying to make was this is an intermarket study where it is a relational, it's a comparison between SML and SPX. And you can see obviously very, very weak, trending down, terribly awful. But I had this like, I think we're going to pop thesis. So I wrote that for clients, and then sure enough, boom. Now we got a little bit higher, and you can see the dates. That was September 5th. That was September 11th, a week later. And then I shorted IWM and showed clients why, because it came up here, and you could also see this in IWM, but not as cleanly, because this is what I'm using underneath as a timing tool. This I know, as you do, it can go either way. We can break out, we can break down, but it didn't look to me like a breakout, as it was expending so much energy just to get up to the trend line here in this relational study. right? Does that make
So
sense?
what chart is this?
This is the same one, SML.
Oh, okay.
Make believe it's IWM. It's just easier for retail to think that way.
Okay.
But it's SML. It's 600 of the small caps.
Got it. So why use small caps versus mid or large?
Because small caps have been the ones that have been leading this to the downside. SPY, the Qs, the diamonds, they were all, up there. They were hanging out, not breaking out, but IWM was way, as you could see, right, very weak in comparison to the large cap indices. And we have reason why we got to mix this up. Where is speculation in the market? Small caps, biotech, unicorns, not Apple and Microsoft, right? So I wanted to gauge the level of speculation in the market. I study a lot those sectors. Anyway, that happened October 1st, and where we ended up today was much lower. But the point is, I'm using Intermarket as a way to identify risk and opportunities. Make sense?
Mm-hmm.
Then I go, and I'm getting really into the weeds here, but yesterday morning we had Bank of Japan come out and surprise, after 20 years, they're going to stop suppressing rates, and they want their yield curve to steepen. Guess why? Our treasury sold off. The Japanese bonds overnight had a big move. Now, that was eventful, no question. And I was looking at that very first thing in the morning. That's what I scanned. In fact, my first tweet was, this is really important. We haven't had a move over there in 20 years. But it was totally, flanked, a wave, just ignored Bank of Japan for a minute, if you will. And we had a breakdown, I noticed, first thing, in HYG and JNK. This is high yield and junk bonds. So they had started to break down, which hadn't happened. And then we got the ISM report. So ISM was this economic data point I was mentioning. I also scan economic calendar of potential market moving, news. ISM is a really, really big one. So the surprise was very negative. But why this matters, because last month it was 49.1. It obviously rolled over. So it's not a one-off, it's a continuation. And you can see the trend is obviously down, right? So this is Trump's manufacturing recession right here in chart form. And then you can go a little bit further and you can see, this is not my chart, this is Larry McDonald, but that's my deal, is I scour and I'm looking for supporting evidence for my narrative. And my narrative was, we're going down. And my whole thesis was, it's just starting, tighten longs, cover long, go short. It's just starting. We're finally going to have a two-way market. And that was at 10:05 a.m. yesterday morning. And then that was phase one. Phase two in the afternoon was, we're going to have follow through. This is not done. And at the very end of the day, we had mock imbalance to the sales side of 1.5 billion. And I wrote, not done. Next morning, we had what we had this morning. And I'll show you those charts as well. So this is a divergence. So if you will, this is a 9-month percent change. We're getting a little, in the weeds here. But the point is that this is a convergence more likely to happen since they typically follow more closely, right? So that just means the SPY is very mispriced relative to the ISM print. Or the bulls would say, no, ISM is mispriced relative to SPY.
Yeah.
One of them's right, okay? So you got to take position. Mine was bearish. And Larry did a really good job. He made this tweet, and I went, oh my God, we're so going to roll over. Don't forget, there is a chunk of the asset management industry that will, by mandate, take down U.S. equity exposure with a sub 50 ISM. So that also points to ugly earnings. That's a big deal, right? So earnings matter. They really matter. But now let's take a look at the globe. this is a list because we had global PMIs. Right down, you can see all these, arrows, right? Lots and lots and lots of decreasing PMI prints. We have a global economic slowdown, manufacturing slowdown. There are a few that are going up. It's because supply channels are being moved from Northeast Asia to Southeast Asia, for example. Does that make sense?
It does.
So I'm looking at the manufacturing export orders, which, by the way, fell off a cliff. This is courtesy Daily Shot, Wall Street Jesus, Wall Street Journal. Sorry, Wall Street Jesus is the option service. I highly recommend, by the way, I love them. So this is basically another economic indicator of weakness. So with SPY so up high, 1 or 2% from all-time highs, my thinking brain is like, yeah, that's not going to last. But we needed a trigger. And China, the news from the White House on Friday, of course, of potential limiting of investment in U.S. investment in China, and also potential delisting of Chinese stocks. That was a big deal, but that was just foreplay compared to what happened with the ISM print. Now, this is getting really into the weeds, but I'm just trying to explain that because I have, some sophisticated retail that really digs macro, and some, of course, pretty savvy institutional that really dig macro. They use it as their top-down approach to their portfolio management, that I grab stuff that's going to be relative to the macro theme, okay? And I also thought leaders that I respect and grab their positioning as well. So this is just one newsletter, if you will, but I'm showing it as an example because it's what I use to, and of course there are lots of bulls out there, there are bears. My point is I'm trying to find the most logical argument that matches my read on the intermarket, the technical, et cetera, et cetera. So this is another thing that indicated, oh, we're in trouble for today. And I wrote about this yesterday, talked about this yesterday in the trading room. So CTAs are quants. There's a very, very well-known one in the market by Nomura's Charlie McElligott. He's the guy with the big red beard. You'll see him on the networks. Anyway, quants, which make up a big little chunk of portfolio money, would start to de-risk around 29.37. Do you know where we closed yesterday?
Not without looking.
29.38. That's way too close for comfort. Way too close for comfort. So that was another reason why I was more convinced we were going to, or I should say higher probability we were going to go lower versus bounce. And the way that we closed was really not the reason, because I've been caught off sides many times when we just happen to close on the lows and then we just gap up the next day. Oh my God, I've been caught off sides so many times. The point is I'm really emphatic that the ISM was a tipping point, and we had a big rate of change also in the 10-year from up 3% to down 3% in a New York minute. And that type of movement in fixed income is not welcome. It's not well received. So they're not momentum traders like we are. Mm-hmm. So anyway, I get into the weeds, long story short. And then of course, China is a big deal with, this is the last thing I'll talk about, and then we'll go to the next one. China's a big deal in regards to Trump sending up the flagpole, if you will, a teaser balloon that billions and billions and billions of dollars are invested in Chinese companies, and it is his prerogative to pull that, and it would just be a big deal. And China kind of retaliated and said, yeah, we don't care. But the point is, it is a risk-off moment for wealth managers if they have any sense, at all. So I'm looking at my Twitter feed, and there are generals that are saying, get our money out of backing Chinese troops, right? I mean, like, this is going to become a narrative, right? And I wrote about this. This is the funny thing. Back in June, I wrote an article for Seeking Alpha, U.S.-China trade war's next target, capital markets. So we have a trade war going on, right? Now that's with tariffs, that has absolutely expanded to also include economic war. This is now capital war that is potentially in front of us. And you even have, and I've written about this so many times, but my point is, this is just a quick summary in my free thing, that you have Ray Dalio saying, this is a big deal. You know, you have major equity strategists and, you know, really, it's a big deal, but it's not really understood yet or widespread. So, hey, that's us. So that's what I mean by intermarket and macro and quant. I kind of like scan all kinds of stuff, Jeremy, to come up with an idea.
But there's a lot of information for sure. So, I mean, where are you getting the ISM information? Where do you access that?
Oh gosh, I'm sitting down every morning for 2 hours with my tea and just going over, you know, headlines. Reuters, Bloomberg is my absolute favorite. Wall Street, Jesus. I keep doing that. Wall Street Journal. The amount of data out there is many. It's trying to come up with those who can actually synthesize it. So there are sources I go to basically on Twitter as well, who are phenomenally insightful, and they are generous enough to share their insights on Twitter. So there are all kinds of places that I go, and I also have colleagues, and I will ping them because I don't do the fixed income so much, right? Or I'm not a core oil trader, and I'm gonna go right to them in DM and say, tell me, what are you doing? What does this mean? I'm not afraid to ask, not even a little.
Which is good. I mean, and do you feel that the people reach out to you and respond to you a lot?
Oh God, yeah. Because, oops, sorry. I like to, you know, to give back. I'm not just gimme. So there's definitely a give and take. And I think that matters a lot.
Gotcha. So Stephen has a good question. He mentioned that you predicted a drop in gold on September 13th. What are your thoughts on it going forward?
Okay, so I covered the 13th. I covered Monday. Hold on, I'm gonna have to go look. When did I cover? I covered my gold and went long silver. I gotta look at my silver. Hold on. Here's my silver. So I covered my gold and I went long silver for just a trade. On 9:30 I entered and I exited part of it today. So I have a thesis that I'm going to reshort gold, but not yet. I'm waiting for this to finish.
Gotcha. So explain this chart for people really quick. So if you can pull that back up, sorry. That looked like it was a call option.
Yeah. So this was a chase, right? Because it was literally Monday. I bought it when the price was $15.88. Was it Monday? Yes, Monday. And here is, so this is triggered, by the way, there's no manual entry. I place a trade in Interactive Brokers and it basically, it spits out exactly the detail, but this is all Python, and so it looks pretty, and it goes in SMS and, you know, email as well, but it delivers the exact trade, but in this pretty format. So it was silver, and one can mean anything. One can mean $250, and for Big Dave in Texas, one can equal 250,000. This is just a relative position size, okay? This was what I used, an October monthly $16 call. My thesis, I don't have much room to write in this, bounce. Entry price, I had a tight stop loss. Usually I'm really—
Yeah, that's 11 cents, girl.
I know it, because, and by the way, I never do this. I'm so, honestly, I stink at stop losses, but this was a good one. I had a really, like, it's going. Partial exit means 1630 and then 1660. We hit 1650 today, and I decided not to cover because there's a gap, 1663. So literally 33 cents in, sold 50%. You know, this only 2 days in and I still have a runner.
So how, based on the chart on silver, what did you use to make that prediction or that analysis?
Okay, so now let me let me go to another chart. Give me a second to bring that up. Okay, this
you're pulling up TC 2000, yeah?
Okay, so yes, I use TC 2000, and let me know if you can see this. Okay, so TC 2000 is not a trading software, it's just a charting software platform. So understand that first and foremost.
Mm-hmm.
And this is a weekly time frame, day and hour, okay?
Yeah.
So it happened to tag this 1587, where else did it? Yeah, 1587. I decided to go long thinking, you know what? I think this is, I have a 5-day rule, okay? 1, 2, 3, 4, 5. 5 red days, I expect a little bounce. It's just a chase. It's nothing too extreme. And that's why I had such a tight thing on this. But I also expected the market to pull back, and typically these pick up with a, risk off trade.
Yeah, so if the market's going down, silver sometimes can go up.
Exactly. So I literally covered my gold here and went long silver. I did not add a whole basket of gold, silver, and miners. Okay. But this was also a really good reason why I thought GDX was going to bounce. You can't see it, but this is purple. It's 100-day. So it's just a channel. All this was a channel bounce. Honestly, I am still of the opinion gold is going to roll over some more. This is
temporary relief bounce, huh?
Yeah. So a little head and shoulders here potentially. We'll see. It can also be a continuation, right? Head and shoulders can be reversals. They can be continuation. What I liked was how it came down below the 10-week. By the way, this is my trend trading time frame. This is my swing, and this is my chase. But it stayed above the 10. When it came back, it usually, the first time, it goes right back up above the 10. Next time, it stays below it. So that's why I just did this for an oversold bounce. It was just Bollinger Band, was like, the cup of your hand. It just made sense to me. And so far it worked, but I haven't closed, obviously, the other. How far did this get out? 1653. So the gap is right here, 1663. Looks good though. We'll see what happens.
Yeah.
Okay.
So I like that rule. You mentioned the 5-day rule. You have 5 down days in a row. Then you're kind of looking for a little bit of a bounce. So it could be a quick in and out. You're just trying to capture some alpha.
Yeah, but that doesn't always work, because take a look at this. Microsoft closed today, and I'm really not happy about this because it would have been a double. But my stop was hit. So I had a stop loss of 140. Guess what it hit? 140.25. Took me out at a huge loss, almost 80%. And by the way, if my program is that if it's 80% or more loss, it just stays there because, usually it sells off on option expiration, but why bother? This fell right under 80%. I screwed myself. But the point is, I lost on this trade, and where did it head to? 133 today. So this is the downside of having an automated trading program, right?
Yeah.
That's the downside. I did have, a little swing, little profit trim on my electronic arts.
So let's pull up your Microsoft, if that's okay, and look at that a little bit and talk about Microsoft, because I have some very interesting thoughts.
Rub some salt in the wound, do you?
Yeah, I want some salt in that wound.
Okay,
yeah.
You're gonna love this. Look at this. Everybody, my clients know I have been beating myself up trying to time this what do you call this? A Crazy Ivan channel. Okay?
Crazy Ivan channel. I've never heard that ever.
Oh my God. Red October. I use it all the time when you have this absolute crushing.
Oh.
I can't even tell you how many times I've been taken out by Microsoft. And then look at it. It doesn't just trade below the trend line, the 55, the trend line. I was just like, are you kidding me? Really? And this is where it took me out yesterday.
Yeah.
140 and 25 cents.
Brutal. Yeah, that gap up trapped a lot of people.
Yeah, but I was chasing right now.
Yep.
Not so much on my JP Morgan, and I'll show you that one. So here's a trade in JP Morgan I put on 3 times position. It was December. So I've got time, right? I can put a little bit more size in it. Does that make sense?
Mm-hmm.
Okay. Entered around 118.
So this 3 is like 3%.
No, it just means 3 times whatever your 3,000. Think of it as 3,000.
Yeah, whatever your risk is.
Exactly.
Yeah.
Okay, so how do you like my thesis? Smells fishy.
I love that.
All right, so a little profit of 38%, but it's on a 3-time position, right?
Mm-hmm.
So that, let me show you on a chart why. All right, so my thinking was, especially on this little puppy, ginormous expansion bar followed by 2 dojis. Typically, This is called the cradle formation, and I love this to right here, which was 113.
Mm.
So this should, quote unquote, should continue, not right away, because I think we're going to have some chop, but we have non-farm payrolls on Friday, so that's why I took half off now. So even though it was a December, I thought it would take a little bit longer. In other words, we would trade down into FOMC. We would trade down into bank earnings, coming up. But I didn't expect it in one day. That's why I had a December. I should have done the JP Morgan Chase and the Microsoft December.
It's interesting. So if you pull up the daily chart a little bit, I'll share with you. I was also bearish on JP Morgan for just a little bit of a different perspective, but very, very similar outcome. And mostly because you mentioned the really highway bar. So this was just so much buying on the daily chart. So you had buying, just massive amount of buying, tons of green bullish candles. And then what was really interesting, a signal that I don't see very frequently, especially on JP Morgan, but just bigger name, bigger class stocks, is do you have volume anywhere on your charts?
Yeah, I don't do volume. I do it on another channel. In other words, I look at it. Yeah, I know it's weird, huh? I'm not. So this is very messy, and I would never present this. But yeah, I have a gazillion different indicators and time frames, and one of them has volume.
Okay. Am I able to switch? I was gonna say, I could do.
Here's volume.
Do it on the daily for me, if that's okay. Beautiful. All right. Thank you very much. So what was interesting on this one is 2 things. So notice this little cute volume spike right there. So pretty unusual volume coming in on JP Morgan, specifically on the 20th. But what was even more interesting is notice the highs of those 2 candles. So the highs of September 19th and September 20th.
It's a 2-bar reversal.
Bang, the exact same high.
Oh my God. Look at you. That's brilliant.
Yeah.
I didn't see that. I love 2-bar reversals. You see them, you let me know, okay?
I will keep you. Same goes to you. I'm a big fan. So pretty much once those 2 patterns came in, I was bearish on JP Morgan. And it was like, well, here's the thing, guys. I was like, you could take it out a little bit higher, but I was buying 120 October puts. So very, very similar pattern, very similar play that you had, just almost entirely based on the same thesis that you had, this was also an all-time high.
Yes.
All-time high, never been higher in its entire history. Huge bullish volume, huge bullish buying. It's like, who in the heck is buying JP Morgan up here? All-time high. And so then you see this pattern that has 2 candles with the exact same high with increasing volume. It's like, yeah, you got to try it.
Yeah, I love 2-bar reversals. That's brilliant. Yep. Can I show you something in XLF? Because that's going to be interesting. Guess what? I saw a little bit too late. When you see this on a weekly as well, it's pretty much power. But look at this. Low 25.92, low 25.92 on a weekly.
Ooh.
So that was the time to go long XLF or any of the banks, right? Once you see that is gorgeous. So you and I, seriously, text me.
Oh, definitely. Yeah. Trust me. No, that's a great point. You're right. I missed that one as well. But I do love on the daily chart on XLF, that August 15th candle. I did not play XLF, so this is something I had no position in at all. But the daily candle on August 15th is like a very nice, those are those really pretty indecision, high wave, perfect doji. And that's one of the candles that created that 25.92 low. So that's nice.
Very cool. I'm looking for what I did for JP Morgan. I did a December 115 put, right?
Mm-hmm. So you went out of the money longer term. I went in the money shorter term, but same thing. We were both bearish.
115 wasn't too bad, but yeah, but I was looking here. I was also seeing at the time, there was a lot, as in thousands of contracts came in. Today, not so much.
But that's still the most, though. That's the most volume of any of those, huh?
No, hold on. For December?
Yeah, whatever that one that you were looking at, that seemed like the 115.
I was on the 115. It's the third.
Third, okay. Well, there you go.
Yep. So this is something else that I do intraday. I kept saying Wall Street Jesus, but yes, that's actually the only service I subscribe to is for unusual option activity. And I do not play unusual option activity just because it has to align with my chart read.
See, that I like a lot. That I like a lot because I get asked, Samantha, at least once a week by someone, hey, do you ever look at open interest or volume increasing on options? I'm like, well, here's the thing. I've tracked them and it works 50% of the time, right? Shocking. But if I can see a chart pattern or trade setup that I like for whatever reason, bullish or bearish, but then I also can notice a corresponding option shift, then I'm like, oh, cool. Like one more small tidbit. That's like one more banana in my smoothie. It's not going to be a bad thing.
Well, I am the same way. I do, by the way, track not open interest so much, except I want to have a very robust market to trade, to get in and out of. Like today, I got stuck on DDS because there just wasn't.
Yeah.
I couldn't get out. Yeah. And I was just like, are you kidding me? I'm up, a lot at 100% and I can't get out. So the spreads were too wide. But with JP Morgan, it's not an issue. So I do look, this is always open, so that I can spot outliers. Like you can tell when something comes in, not today, today was very busy, but if it's a boring day, it's gonna stick out like a sore thumb. And you can see put positioning, like at Apple this morning when they said, oh, you know what, I think we're gonna have a pullback. You could see the protective puts coming in January of huge size, right, on Apple. I'm not looking for that kind of stuff, but I am looking for a sentiment read. So you can, January, they're positioning. October, it's not so much of a chase, but the stuff that's getting absolutely, chased by the strikes that come up, right? Near term or further out. So I do check volume in a stock that I'm interested in for sure.
Beautiful. Okay, that's very good to know. And Thomas has a great question. And interestingly enough, this exact same thing came up last time you and I were on a webinar together. So Thomas says, what is your forecast for the S&P 500 for the rest of the month? And do you see the market indices making a climax bottom near the trade meeting with China and end of next week?
Okay, so you want my market prognosis.
Yeah, let's hear it.
All right, so I'm going to do that. Let me find something just for you.
Okay.
Hold on, because I wrote about it today. Okay, can I show you something else though first?
Yeah, sure.
I'm really not of the opinion that we're done, but it's one thing to have an oversold bounce. It's another thing to have a lot of chop and then head down. So here, I want to show you something, Thomas. First, this is part of my intermarket analysis work, okay? So check the dates. On 9/11, a rarity for me, I tweeted this out. I don't send a lot of charts out on Twitter or stock twits because I'm going over 100 a day, first of all, and my intermarket is really relegated for clients. But it was important. I sent this out because I thought it was a timing, be careful. As bullish as you think we are, so 1% close to all-time highs, be careful, and here's why. This is the, NYSE is actually like 1,900 issues, more than that, versus the S&P 500 issues, right? So it's more inclusive. I use the advanced decline. I use NYSE as well. And this is the SPX on top. And this is the NYAD, advanced decline, cumulative. It's another intermarket relationship, okay? It's not a ratio, it's just a relationship. So I am looking at this channel going, are you kidding me? And I'm looking at this trend line and I'm saying, and you can see where we were, it was very bullish. In other words, I can tell the troops, it's safe to go into the pool, right? Get out of the pool. Get back into the pool. Now this is on a trend kind of time frame. I'm also really focused on the inflection points, no question. But my whole emphasis is I can show with pictures something very easy, easier than words, that we potentially could have a reversal here, right? Now, my fault, it didn't actually just tag and curl. It actually went flat for a good, little while here, which was frustrating because I was trying to short it on too tight a leash. And then also September expiration in 2008 is when we rolled over. Just happened to be a timing congruence thing. I was kind of curious about that. So here it is on the 1st, right? On Tuesday.
I love your emojis, by the way.
I know, got to have a little lightness, right? So having said that, I haven't looked at it today.
Can you create your own emojis with your face?
No.
Oh, that'd be so much better.
You're so cute. A little red hair coming off the side.
Yes.
So I am one who's going to channel this. I'm going to assume we're going to go down to the bottom of this channel at some point, Thomas, right? So play by play, this takes some time from when I first spied it on the 11th until we had whatever happened today, and I'm going to have to check, after. Do you see my point? So I don't think it's done.
So what is that low?
I'm gonna tell you. So this is on a monthly. That was our first day.
Yeah.
Look at that. So I bet and that's why I wrote today in Twitter. I don't do a lot there, but when we have these kind of like big moves, I said 2873 has to hold, or we're heading, we got a flash crash situation. We could definitely tumble easily down to 2800, right? So that's on a monthly time frame, and we also have the oscillator curling over. How I also felt pretty confident that this was going to wreak a little havoc was all the indices in this rate of change work that I do, we're rolling over. Okay, so rate of change on any of the indices, this is stock charts, is also a kind of a good indicator for me of when to stay in, when to get out. Does that make sense?
Rate of change.
Rate of change. I'm trying to find something else here. Oh, and we were rolling over here. So my point is, Thomas, I don't have yet the answer except 2873 needs to hold, or we're going to hit 2800 in quick order. And then I did a little thing today. When is it safe to buy, which by the way is just for clients. So if you're in the webinar, you get to see it.
Yay.
Isn't that special? Because you are taking the time to learn. And you know how many people don't? It's really impressive. You're here. And these are not, this is not so simple. So this was my Monday thesis. We were heading down here. Okay, 2873 needs to hold, or we got another channel. Make sense?
Makes sense.
So then that was, by 10 o'clock this morning.
That's pretty much the low of today, 2874.9.
Yeah, that's it. But we got to hold that. Mm-hmm. So then this was 12:30. So we were basically coming into my, my price targets, and I wrote to clients, hey, we tagged 2875, but it needs to hold, or we got some crash to 2800 coming up. This is volatility. Who says you can't? I do it all the time. I have a stock bond volatility ratio. I have my VIX. We got an inverse head and shoulders potentially. And this is of a much bigger wedge. I'm not going to go there and, wreak havoc in your evening. But the point is, we have absolutely room to go higher in volatility, no question. This is my NYA. I hope I can show this. Yes. All right. This is secret sauce. Okay. So not only do you get to see this chart, which allowed me to time the January 2018 top and the Christmas Eve massacre of December 2018. But here we are, right here. We have, this is the NYA, which is again the 1900 plus shares. For me, it's a much cleaner charting mechanism than the SPY. And there is nothing bullish about this. The MACD is rolling over. It is just gyrating here. Can it get its act together and go higher? Sure. But it has been hitting that. This is today. I don't even know. This isn't today. Ooh, today's going to be lower. At the close? No. It's going to be right here. It's going to be right here. Because I took this at 12:18 and we didn't go too much further. I think this is going to be it. So hold on. Let me get out of here. So this
corporate index. What an interesting chart.
I know it. So when to buy? This is what I wrote. We're starting to roll over. Obviously, this has been a theme of mine. We're hanging out, not breaking out.
Yeah, you've been saying that a lot.
I have. China delisting fears are real. Tuesday morning was phase one. Market cared about ISM. Finally, we had a two-way market. Tuesday afternoon, we had phase two. Actual follow-through. When's the last time you saw that, right?
Bro, so rare.
Wednesday was phase three, institutional de-risking. That's what we had today. CTAs and others that said ISM, that blows. We gotta lighten up here. So talked about 2873 as needing to hold, or we got this, potential here of definitely 2800. Did you notice Pelosi was talking infrastructure all of a sudden, right? So yep. They're trying. And so answer to your question is yes. I think we're going to have some big economic data coming up with non-farm payrolls. We've got also U.S. trade balance. Fed Chair Powell is going to speak. Does he utter the words 50 basis point rate cut? Does he utter the words quantitative easing? Then we actually have, some calm that could come into the market. But I don't think we're going to have any V-shaped thing going on. We have big stuff coming up next week, okay? So first and foremost, September FOMC minutes are coming out October 6th. People don't think about this most of the time, but we're going to get some clues in those minutes from their last FOMC meeting of whether they have any interest in further rate cuts or not. Remember, there's danger in having a third rate cut. Mid-cycle adjustment, might be okay for two cuts, but then you're really into a late cycle. Oh my God, the market realizes we're actually late cycle now. Anyway, keep this in the back of your mind. Yom Kippur, I got to tell you, sell Rosh Hashanah and buy Yom Kippur is a thing in the market. It's in Farmer's Alma. You know what I mean?
Yeah.
And then we have the China trade talks coming up. Yes, the 10th and the 11th. I have to tell you, I have been on record for over a year and a few months saying not a snowball's chance. This market will go sideways to lower into the 2020 elections. This is before all the impeachment talk. There's no way we're going to have a trade deal with Trump. No. It's 400 days long now. Just no. So what can the Fed do? Etc. Liquidity, repo ends on October 10th. They'll have to come up with some other system of infusing liquidity to create stability. But I don't think that we have, removed ourselves from the risk at all. In fact, I think we have more risk now, not just with, the impeachment sideshow, Warren picking up steam, which is basically not market friendly, and that's not a political statement. Sanders' heart stints today likely takes him out of the running, which makes her rise up in the ratings, if you will, the bets, the Vegas bets. That's not market friendly. I don't see a bull thesis, except for pension funds coming in, buyback desks coming in, which by the way, are closing in the next week, right?
Yeah.
So this is a big deal. I think we have more to be worried about. I know we're kind of getting out of time and I'm talking up a storm, so I want to leave time for some questions, but this is how I do my chases, swings, trends. Jerremy, how do you do yours?
I don't call them. I love the names that you have. I don't. I would just assume to say I have long-term trades. If it's not an investment, then it's probably either a swing trade or a day trade. So long-term for me personally is like 2 years or more, where I'm buying. Yeah, like so I'm trying to own companies, you know, own wealth. So buy Apple, own Facebook, own Square, BP.
But what do you share with clients? I mean, if you share your trends that are 2 years, really?
Yeah, for sure. I mean, for long terms, absolutely. Yeah, because it'll be something that's how people grow true wealth. Is you have to own part of a company that makes money while you sleep. So you have to have long term stuff. But yeah, short term for me, you are looking at somewhere between the ranges of 2 to 3 days and 30 days, because that's, you know, if you got to pay the bills come every 30 days. It's crazy.
Yep.
Yeah,
that's a good way of putting it.
Yeah,
well, for me, it's crystal ball stuff. I can't see past 3 to 6 months. I just can't. I got nothing. So, and here's my risk management, because you asked me about that. I trade small, but frequently with my mantra, don't risk anything you're not willing to lose.
Yeah, totally. This is a question I have. So trade momentum, when you have 20% of the portfolio, is that, I mean, how many trades will you have that spread across, or is there a number?
Well, chases are the fast stuff, like the Microsoft, right?
Yep.
So yeah, so it's really, this is all swag as well. I put most of the energy into swings, and that's anticipating volatility. And then honestly, I thought I needed more time on a JP Morgan. That was December, just because I didn't want to get too close, to it. But it's not a value play, right? There are some that I have as value plays because they're so oversold, but they're not something I'm rolling over a lot. So it's not anything I'm going to have more than 3 to 6 months. I can't see past that.
Right. Totally. Okay. Beautiful stuff. And this is how you can contact you, right?
Yeah. So I have a macro Twitter handle. I have a micro Twitter handle. I'm very active on macro, Samantha LaDuc, and that's for the macro stuff. My micro, honestly, I do it in my live trading room in the morning from 9 to 12. I write, big stuff, Intermarket, and then that's the weekly, and then I have the dailies, which I just showed you an example of that. Yeah, I'm Intermarket Analysis. I've shown you that. Basically, the micro stuff I really relegate for clients. You are getting a look at how I size up technically, but I don't typically tweet that stuff out. So sign up for under free fishing lessons, which is basically this page. Yeah, that. So you put your little name in here, and then you'll get these occasional posts from me, which are public facing, and they still give you some charts and some macro. The other thing is, I'm gonna get rid of that. This lovely little landing page is a survey, and I hope that it might be of interest to you to take a little tour here, answer a few questions. If you're interested in what I offer, whether it's the newsletter, which also includes a look at the portfolios, that's $150 a month. I've got trade alerts, which are right from the brokerage account. They're $250 a month. And then I've got a trading room, that's $500 a month, and that's a lot. So I do produce, a lot of commentary, a lot of research, and a lot of trades across time frames. Everything has, as I already showed you, the entry, if you will, of stock or option, the tactic, all that. So it's all in there. So take a look if you are interested, and you can always reach out and chat with me as well. Oop, there we go. And then hopefully Jerremy and I can, do these once in a while. This is timely because the market was so dramatic.
Yeah.
It was so dramatic. And we were kind of lucky to have that as a backdrop. But when we talked when did we do our thing? Like last month? And you said, are you a bull or a bear? And I said, I'm a total bear. Like, remember, I had already moved I had taken my long positions, and I said I had kind of like equaled them out. I had equal longs and shorts, and I was moving into mostly shorts. Like I really sensed we were going to go down. It wasn't fast at all. It was from September 11th until October 1st is a long time for a day trader or swing trader to have theta decay. And then, boom, all at once in 2 days.
Yeah. Crazy how fast it moves, but that's normally the case. Really quick. Yep. Okay, well, thank you so crazy. That was an hour, huh?
Well, you told me you're like, military time. We've got 1 hour. Let's do this. So did we do it? Did we cover everything?
We did it. Yes. Thank you, Samantha, for that information.
And continued success on your fabulous teaching and cheerleading and those awesome trade results. So keep up the good work.
Thank you so much. And for all those who are here, I really appreciate it. Albert says that was awesome. Thank you. You're welcome. Shura says thank you both. Awesome sharing. Yeah, our pleasure. And again, hope you had one fun takeaway. We learned one little piece of information. If you did, then it was worth it. I learned something new. And again, Samantha, thank you for your time. So folks, have a great rest of your night, day, week, year, month, wherever you are in the world. You absolutely rock, and let's continue enriching lives together. We'll see you guys later. Bye.
Take care. Thank you. Bye.
Bye.